Hi there. We're going to get a better grasp of those generally accepted accounting principles, or GAAPs, that you did the little quiz on near the start of the course. So what we're going to do is I'm going to read and explain a little bit about these generally accepted accounting principles. Hopefully you will have opened up the file called Generally Accepted Accounting Principles, and you will be ready to enter in the missing words as I read along and explain to you. Off we go. Generally Accepted Accounting Principles, or GAAPs. The Canadian Institute of Chartered Accountants publishes a handbook containing generally accepted accounting principles. This book standardizes accounting terminology or concepts and rules of conduct principles. Concept number 1, business entity. A business's financial information is recorded and reported separately from the owner's personal financial information. For example, if I was to own a business called Bonneau's Golf Shop, I couldn't record as part of my business my personal car that I used to go on vacation with. However, if I owned a business vehicle, that vehicle could be part of the business. I hope that makes it clear. A person who owns a business may also own a home and a car. The business owner should not include information about the individual's personal belongings. Financial records should not be mixed. A business exists as an entity separate from its owner. Concept: continuing concern. Financial statements are prepared with the expectation that a business will remain in operation indefinitely. Clarification: any business is started with the expectation that it will be successful. It would kind of be silly to start a business and then expect it to fail. Owners expect to continue operating their business well into the future. The example that I have here for you, Jerry Ford starts a business expecting to continue it until he retires. When he retires, Mr. Ford expects to sell his business, and he expects the new owner to continue the business. Continuing concern means that it will continue in the long term, and that you don't think or expect that it will fail. All accounting records and statements are prepared as though the business will continue. Principle: conservatism. The actual amount paid or received is the amount recorded in the accounting records. Clarification on this: accounting practice requires that all things be recorded at the cost that is known. So if you know that your new bicycle cost $400, then that's what you would expect to put into the accounting records. The example that I have for you here, John buys a computer for $1,200. A year later, he buys a bigger disk drive for $695. The total cost of the computer is now $1,895. The amount which he must record the computer in his books. He cannot say that the computer is still only worth $1,200 because it's not. He's now added a larger disk drive, and so the value of the computer has increased. Simultaneously, if he thinks that he could perhaps sell his computer to you for $2,000, he can't state that that is the value of the computer. Okay? It has to be the actual cost that was incurred to the business owner. Okay, there's a little clarification on some of the GAAPs that we have done. I hope that clears things up.